Hey everyone, thanks for checking in. This is Michel Bron with the Bron Realty Group, as you can see right here. And this is our market update for the end of November, beginning of December 2021. We're approaching the end of the year and we are pretty much on the same trend as I've talked about in the couple previous videos in terms of the way the market is behaving right now. So I'll give you a few perspectives from some so-called experts out there. So there's a company out there called Norada that puts out some really interesting information and stats about the market. They're saying that the housing market is demonstrating signs of rebalancing as evidenced by a steady pace of transactions, more moderate price growth in October and November, while the housing market remains largely a seller's market due to demand still outpacing supplies. It is clear that things are changing. More homes are coming on the market, homes are remaining on the market for longer periods of time, and the number of bidding wars has decreased significantly. Despite this, buyers must still be prepared to act quickly, even if they get a few additional days to decide. So this is from Norada. From Fortune magazine, they're trying to talk about housing prices predictions. Predictions for real estate, just like anything else, are very difficult to do. But they're saying that while inventory has increased slightly, it remains significantly below pre-pandemic levels and is simply unable to meet the current demand. The latest housing news has Zillow revising their 2022 real estate forecast. They're saying that when they released their bullish 2022 forecast in September, they were predicting that the home prices in the United States would rise another 11.7% over the next 12 months. However, the real estate listing site has now claimed that their previous forecast was too pessimistic, and they published a new report predicting that home prices in the United States would increase by 13.6% between October of 2021 and October of 2022. So approximately 2% additional of price increase. How are they exactly coming up with such precise number? I don't know. Another very reliable source of information about real estate is Fannie Mae, Freddie Mac, the Federal Reserve branches. Freddie Mac expects housing prices to slow to 7% in 2022, but this is for the national average, not for Los Angeles, which is where we focus. As Los Angeles is a major metropolitan area, although house prices are forecasted to slow down, the percentage will probably be higher than 7%, although how much higher is not really determined yet. The California Association of Realtors, which is the association that I belong to, as most realtors do, rising mortgage rates, a limited supply of homes for sale, and a lack of affordable homes for most buyers will likely curb median price growth. That's what they're forecasting. But demand would still outstrip supply, creating more upward pressure on prices, according to the California Association of Realtors. And as a matter of fact, in Los Angeles County, in October of 2021, so last month, the median home price rose by 10.5% from a year earlier to an average of $790,000. And then to finish talking about the market, we're going to talk about the mortgage rates. Again, the California Association of Realtors economists projects that the average interest rates for the 30-year fixed mortgage rate will rise to 3.5% in 2022, up from this year's projected rate of 3%. So far, this year's rate has averaged 2.9%, but it's expected to rise by year's end, which is right here around the corner. And as a matter of fact, rates right now are somewhere a little bit above 3%. Fannie Mae economists are forecasting that rates on a 30-year mortgage will rise only modestly over the next 2 years, hitting the 3.4% mark by end of 2022, and then leveling off at 3.5% during the last 9 months of 2023. Again, those are predictions from so-called experts. We'll see what happens. I can tell you that, whoops, I just moved my camera here, so I'm not shaking, it's my camera. I can tell you that our last listing that we had put on the market, we sold for, we put it on the market at $895,000. We were very much in market, within price range of the market, and we ended up selling it, putting it in escrow for $200,000 over asking. We got 15 offers. So as much as I just said that the experts are saying that on average, multiple offers are diminishing a lot. In some markets, like where this house was in the valley, we got several offers, a lot of cash offers, very, very motivated buyers. So there you have it. That's where we're at for the market. We'll have another video at the end of December, and we'll let you know how things are. Usually things slow down a little bit around the holidays, so we'll see what happened then. Of course, if you have any questions about your particular situations, feel free to give me a call, send me a text, an email, send a smoke signal, whatever works, and be happy to talk to you. Thanks a lot for checking in. Stay healthy out there, and we'll talk again soon. Bye-bye.